Peter's here. Peter, I thank you, bro. I'm really looking forward to talking to you. Welcome back to F.A.C.E, my trading warrior brother, Peter Goodburn.
Can you hear me?
I can hear you, Peter. How are you today?
Hey, good, great. Hey, this is great.
Welcome back.
Thanks a lot. Yeah, thanks.
And look, and no blinking screen.
Oh, that's good. Yeah, I think we had. I think one of your listeners piped in and said, "Hey, I think we had a Mercury retrograde." And of course, for those that are astrological minded, Mercury retrograde always causes a bit of fuzziness around technology. So maybe that was it.
I thought it was like the movie The Core, which I just watched a few days ago, which is about, losing the magnetic properties of the core, and which cause EMP and, all kinds of apocalyptic stuff. So anyway, speaking about at least interruptions. So is this where you want to start, Peter?
Can you see the S&P?
Have the S&P here with the potential for 29.28 for a 5 and then a correction.
Yeah, I have to say that when we spoke last, I was already expecting a top out. And it's funny how the time goes so quickly, because that was almost a month ago and we were at this point here.
Yeah.
And I thought that we'd actually topped out. There seemed to be, this to me seemed like a bit of an unnecessary sequence, because ordinarily when we start looking at the way that all the US stock markets moved higher from December's lows, now don't forget that back in December they all bottomed at exactly the same time within a few days. So
and topping at different times. Russell still hasn't taken out its Feb high. Is that the unfinished business before the correction begins, Peter? That's what I'm thinking.
Yes, I mean, there seems to be that we've got underperformance in things like the Russell, which topped out earlier. And don't forget that the banking index, I was taking a look at that a short while ago.
Hasn't done anything. I mean, it's 61.8 back of the whole decline. It hasn't been able to close above it that I've seen.
Yeah,
XLF, right? XLF, right?
XLF. Well, I've got the KBW banking index itself,
okay.
And there's an ETF which is something similar called KBE, but I'm not sure. Let me switch over. I'll show you what I mean, because that one finished early as well. Look at this. This is again at the beginning of March.
Right.
And we've had this big sweep down.
Was that a reversal signature, that sweep down? I know you have something called a reversal signature, where you need a certain percentage move off a swing high or low to tell you we have a reversal.
That's right. Well, we got the reversal signature here, and we got stopped out here because it went to a higher high. I didn't expect that higher high at the time.
Okay.
And we actually triggered some stops. We got back in, fortunately, when it started this day here to drop down on the close. So we caught some of the move, but not as much as I would have expected normally. But if you consider that we went from 102 to that move down to 90.75,
that's a big 10%.
Yeah, and that's the sort of swing that you would have expected to happen, universally across all the major indices as well, including the S&P, but we haven't. And I think there might be some clues from the Russell, because I was taking a look at that actually just before we logged in just now, and I think it's a clue, because can you see how we've dropped down in 3 waves again from February? So you got a fairly concise three wave pattern there. We put the brakes on and we started to pull up. And I was looking at this last night and this morning again, but I think this is going to stretch up a little bit here today. And then I think probably I'll update this chart to show something like this. It's called an expanding flat pattern, and it's a 535 zigzag from the 1497 high. So it'll probably come up like this. We'll drop back a bit, and then we'll probably go up to this number up here, this 1629 area. That's derived from extending. If we put in the 14, 23, 38 levels, and we extend like this, you're going to get to 3 important FIB price ratio levels where we can see a B wave of an expanding flat develop. I've chosen 1629, which is the middle one, the 23.6% area, but I might raise it up to the 1646 level. And then we'll get after that, we'll get a 5-wave drop down to this number here, this 1435 area.
Okay.
So it might be that we're going to have to stall for the S&P or wait a bit. It might end up pulling down in 5 waves, and when this trends up, rather than underperforming, which it's done recently, it might swing around in a slight period of outperformance for a while. I'm not certain about that because it's very difficult to prolong the S&P's advance at the moment.
You know what catalyst? Now that you're bringing this up, the underperformance. What a catalyst may be is, right or wrong, a lot of people gravitated towards Russell last year because they felt it was insulated from a trade war. Mm-hmm. And also, it likes a strong dollar because they're domestic companies. So it's possible maybe it's because once its dollar correction is over, and I want to talk to you about that, mm-hmm. and perhaps some type of friction with Europe that's already beginning with small things. Mm-hmm. Everything's a war, either a trade war or threat of military intervention. So maybe that's going to be behind Russell outperformance, making quite a nice new high, and the percentages in the other indices, like you said, will not be as great. Could that be a fundamental catalyst, bro?
Absolutely right. Yeah, I mean, it does look as if now that the US-China negotiations are closing in on probably a preliminary agreement, at least, if anything else, then Donald Trump's eyes are going to start looking at Europe, aren't they? Because he's threatening about sort of putting punitive tariffs on car parts and imports and stuff like that, and wine and cheese and other few items like that.
Oh, gosh, all the winos in the U.S. are not going to be happy about that.
Well, you have to stick to your Californian wine, won't you? Yes.
Yeah, that's true. Domestic wine, so buy domestic.
Yes, that's what he's trying to do. He's trying to stimulate the domestic economy, Okay. I mean, if you can do that rather than drinking foreign products, you start cutting the trade balance and stuff. But
I like beer better anyway. As long as he doesn't put a tariff on Guinness. Anyway, Peter. So
the Irish would never let that happen. Never.
Good, Pete. All the people who love a chocolate milkshake beer, which is what it tastes like to me, they'll be happy about that. So, okay. We've covered stock indexes, and I know that longer term, you're looking for much higher levels in the dollar. And the question is, everyone was saying the breakout over 97.80 was a layup, which made me think that we could have one more jiggle to the downside. I'm now asking myself, was this enough in the last week and a half, or is a full-blown retest of 96 in the cards, which could keep risk on? What do you think?
I think that, well, for sure, we're going to get up to 102.79. This is this number up here. Yeah. There's no doubt in my mind we're going to do that. The exact timing of this next acceleration, I've been looking at some of the commodities to try and pitch when that timing might occur, in particular oil and not so much, well, gold is a good indicator too. But also I'm looking at things like copper. I published this chart, this one, last weekend as our weekly prenup for our institutional clients, and what I mentioned there was that here's the August lows that we saw last year, and this was the beginning of copper, which is the middle chart. This is the beginning of the correction down from this high here, and it's taken the form of what we describe as an expanding flat pattern, 335. We've come up here. We've pretty much done the targets. It could squeeze up a tiny bit more, not much. When you look at sterling dollar, that's a very good proxy because, again, last year when the dollar index started to push up from February and the euro started to decline from February's highs, the sterling dollar was a little bit late. It was about April time. You can see copper was even later. before it started to kick in this correction. So there was a little bit of a mismatch at the tops, but they all bottomed exactly the same time in August, as you can see here.
Right.
And then again, sterling dollar's done another expanding flat pattern, and that's getting ready to
bottomed
head
in
down.
January too.
Yeah,
December,
exactly.
January. Yeah.
Yeah, absolutely. They were just they were days apart, and so this is really burning the candle to its end now. And I think that we're looking at an imminent drop. All you need is one daily bar, which shows a bit of volume going through to the downside, and I think you get your trigger point. If you want to preempt a reversal signature, you can go in. I think the chances of moving down quite substantially is I consider to be very high. And crude oil is another interesting aspect. Whereas the US indices have all pushed up from December's lows into 5 price swings so far. So we've got the S&P we looked at just now and the Russell, and that's going through a bit of a correction. But actually oil, where we had originally back in December when we hit lows, we knew that this upswing should be a correction to oil's decline in October. But I thought that it was going to match up with a 5-wave pattern, pull back, and then get up to the zigzag. But I've noticed in the last days that actually, let's look at oil now, that we can come back to currencies, don't worry. But
it's a great presentation.
But if you look at oil, here's the zigzag, and it's at a much advanced state, and I thought it could have been. Now this is, I'm short of oil, like I'm maxed out my position. I can't really add to anything now unless it goes up another $5-6, but I doubt it very much. But look here, if we start to extend wave A, oh, I've got the wrong ratios in from before, so let's change that back to 61.8. But if we if we extend this by 61.8%, we're getting into these price areas here, into this band, right where we are.
Yeah.
And this defines the zigzag, which is a correction to last year's drop here from 76.90. So this is very, very late in that scenario. All you need is one big bar to the downside. I noticed that the oil stocks were released earlier today, and they were quite high. So now the US is a bigger producer of crude oil than Saudi Arabia. Can you imagine that?
Yeah.
It's not enough, obviously, to tip the market into a big volume day to the downside. But I'm pretty convinced that this is going to happen within the next week, and it might happen tonight. So you're in a time frame where you've got to be watching this. You've got to be very alert. You've got to plan your strategy trades already. You've got to have them all lined up ready so that when you see the sign, you can step in straight away. Now, it's important to catch the
I have 62 ceiling at top because I was trying it at 68-ish, and I had a wedge line there, Peter, and it turned into a throwover. So the way I would trade a throwover, even though I like to hear the ice crack, I was saying earlier in the day, give me one more high, I'm all over crude shorts, right? But if so we had that throwover, right? So back inside that line seals it. That's how I teach people to trade throwovers. Let it do whatever it wants. Then once it's back inside the wedge line or return line, that seals the deal.
Good. Yeah, absolutely. It would take care of it for sure. I mean, the delay here, I mean, we might trade up to 66, another couple of bucks before we start to turn around. Yeah. One of the other things I'm pretty fascinated in at the moment is, let's go to 1393, is the banking index, because I mean, this to me is a really fascinating situation, because actually in Europe here we're hearing a lot about Deutsche Bank maybe merging with Commerzbank. Yeah. And creating a bank that's too big to fail. Well, I mean, that might be the case. But I think that the banking index is a very interesting play. I mean, look at this, has been decimated since last year. When we started to correct down last year in 2018's correction, right. This has gone past the October low where we initially saw the sell-off in the US markets. And then here it bottomed in December again. Hey, presto. Yeah. But this is a very deep correction. I mean, it's an 85% retracement from back here. I mean, that's really decimating the banks in Europe. But the interesting thing is that we've started to push up in 5 ways, and this is a leading expanding diagonal, and it's composed of 5 price swings, but we've got a sort of an open wedge shaped. You can see the boundary lines are opening out. So actually, the beginning of that pattern is an inversion to a contracting diagonal. This one is narrowest at the beginning point, and then it sort of widens out towards the end. But the interesting thing is that the subdivisions, unlike an ending diagonal in Elliott terms, they're usually subdividing into 3-wave patterns: zigzags, doubles, triple zigzags. This one is subdividing into 5 price swings. So you have 5 price swings in here, and you have 5 springs in here, and you have 5 price swings coming up here. And you can see, we're not finished yet. We've got to have another little shunt to the upside. I mean, it's not too much. But
maybe that happens with your 29, 25, or 28 target in S&Ps.
Yeah, I think it probably shall. It looks as if we're getting ready to push up a little bit more. But after that, I think we're getting then ready for this, deep retracement. It won't break the lows, but this is a fascinating insight to what's coming later after the retracement.
Yeah, so if it's a 2 down there, Peter, that I think if we down there by that time frame, the bond rally should be over and yields might start be heading up again. Is that what you're saying?
Absolutely right, Dale. Yeah, I mean, I think the bond yields are a very important situation. Let's have a look at those, because we've got a major low back in July 16. There's no doubt that we've hit a major low. This was the end of the entire decline from January 1981. Here we've got a 5 pricing event. And we're coming down in a correction. This is fascinating because, as you say, by the time we get down in the correction stock markets, this will also finish. I've got a target down to the 50% retracement level of about 207.50.
Okay.
And from an Elliott perspective, that looks about right because it's about a 50% retracement from this swing from 131.60. And also if we extend this by 61.8, well, we should at least get down to 218. I think we might stretch it a little bit lower and get to 207. But this pattern down is a diagonal. And that's quite fascinating.
Ending diagonal? Yeah.
Yes, ending type. Yeah, exactly.
I love those.
Well, the good thing about diagonals, and when I teach Elliott Wave, I always try and make sure students are learning about the diagonal patterns. Why? Because it's great when they turn up, because you've got a finite price level of completion. So you see, as of course, a lot of people can't get on with Elliott Wave because they say, well, look, you can go through various different extensions in an expanding impulse pattern, and the 5th wave, you think it's finished here, and then it extends, and you go 3, 4, 5. You don't often get a 5th wave extension. So for anybody listening in right now, don't worry about that happening too often. It's probably a 1 or 2 in 100 times it would ever happen.
Peter, what do you think about that? If and the complexity of Elliott, if people just concentrated and had the patience, because it's hard to sit and watch the markets and not do anything, but if you had the patience just to wait for, say you're a reversal trader, that's your like I am, okay, so and that's your forte, and there aren't always significant reversals, so there's going to be a lot of time between it depending upon what you're screening. How about if someone wanted to learn Elliott and just really learned well diagonals and ending diagonals and had the patience to wait just for those?
Well, I tell you what, if they could have the patience to do it, I know everybody's patience levels have decreased substantially since the last 10 or 15 years because we're inundated with information, through networks and stuff. But if you could do that and somehow control your life where these things get turned off for a while and you just stare at charts and look at the nuances, I have to admit, you pick up a 5th sense. You begin to trust your intuition more. And when you put your intuition along a pragmatic level and learn Elliott Wave with all these nuances which encompass the process, you do begin to create a 5th sense, or a 6th sense, I should say. You begin to, it's like they always say, if you're blind or a blind person, you somehow create a sixth sense and you can find your way around. You can sometimes see better than someone with eyes. With full proper sight. And I think that's the case with Elliot. If you have that patience, I think it's achievable. I think the real addiction can come, and you don't have to work too hard at it, if you maybe spend a bit of time, and if you manage to forecast something that works out. Now, I'm not talking about maybe a short-term phenomena. I'm talking about something of duration, maybe a couple of months. And it pretty much follows the pattern that you've drawn up, and it comes to fruition. Now, that's a very powerful thing that you've discovered in yourself. And once you've developed that, I think it encourages you to try more. So it's cumulative. It's a cumulative situation, and it's a cumulative. It's one of the best cumulative drugs that I know to mankind, because everything else seems to be detrimental when we talk about addictions. But this is a very cumulative process, which is, somewhat addictive if you can experiment a bit and trust yourself. And I always think that this is also a meditative process as well, because you have to let go of certain things, inhibitions that you have. And it's almost as if you're looking at them in a mirror half the time, and you're looking at yourself and wondering, discovering, and it is a discovery process. And I think that you have to let go, particularly when you get noise and background of news flows and things. And in the old days, when I was working my trading company and teaching my traders, their performance in forecasting with Elliott Wave was actually not so good. And I took me ages to figure out why. And then actually, I didn't realize that I set up a complete rat program of studying them over a week. I purposely sort of fiddled around with a coffee machine behind their desk, looked to see what they were reading, stuff like that. And eventually I found that they were just reading a lot of trash, a lot of news flow related to the market. And eventually I told them that we'd have to remove all of that process and remove news feeds on their systems and everything. And eventually, they just concentrated on the patterns. And I'm telling you, within a month, and it didn't take longer, their performance was way up. And they really started to get into the groove, into the rhythm of it. And it's a very valuable experience. I have to say, I'm obviously going on about it quite a bit now to you, because anybody listening, I'd really like to encourage them to try it.
Wow. Great story, Peter. And, speaking from, training and mentoring, you're a natural teacher. You just mentored us. And I learned from you. Can we wrap it up with gold and silver and,
Sure.
What the expectations are going forward here?
Well, of course, again, we're sort of dollar biased on this, and I don't think that gold is going to. Why don't we start with something a little bit bigger, longer term on gold for a moment? Because I don't think we're going to move up a lot on gold until we get the dollar index topping out of that 102 number. Okay. So we're going to have to wait a bit. We're going to have to wait. My really bullish count for gold is something like this, but I have to say it's a 50-50 probability. I drew this chart and I've kept it going quite a few years ago when we first saw the low back here in December 15. And I always thought that it might be possible to see a new high on gold. But I have to say that it's diminished that expectation to some extent. I'll show you what the alternative looks like in just a moment. But this upswing, when we moved up in 2016, some of the mining stocks I'd been tracking at the time, and I loved Newmont Mining because there was this huge decennial expanding flat. It took 10 years for it to unfold.
I remember we did an interview. You covered it before the explosion in 2015. Right,
I think we did. Well, you got a better memory than I have, and that was a 300% gain, pretty much.
Yeah.
2016 up here, and this was only 30%. So it was a tenth of the move. And I was thinking, I've got a target of 166 on Newmont Mining. I'll toggle between the two here, and you'll see what I mean. This is Newmont Mining's forecast up to 166. And the expanding flat pattern, 1432, is this one. And you can see the expanding flat. For those of you familiar with Elliott Wave, you can see a 3 price swing down swing for wave A. We get a 3 price swing event up in wave B, breaks new highs. You can extend wave A by 61.8, pinpoint that top. It's picture perfect, really. And then we get this beautiful 5 price swing decline. But look at that. I mean, we've gone from 15.39 up to 46. And here's the correction down since. So actually, I think we've probably bottomed. So any pullback in gold, mining stocks or whatever, I don't think it should break that low anymore. But the main point to this is that you've got this huge upside potential here. And I thought, going back to bullion on gold now, let's go back to that, that back in 2016, that such a move up to 166 would almost certainly mean that bullion would break new highs. But I've since seen that underperformance and this sort of sideways patterning has been detrimental to that process. We are going to go to at least 1530 at some stage in the next 18 months, 24 months period. And it would look something like this under an alternate count. Let's have a look. Here we go. So here's the alternate count. This would be the all-time high then, and this would be a new downswing. And this is just simply a correction, which is going wave A into a zigzag, B down, and we're gonna sort of make hard weather of it, getting up to 1527, and that's sort of the bearish count. So in the short term, where are we within this? Now this pattern up from August's low is an incomplete 5. And it's quite a fascinating sort of journey on this one, because when we take a look at that, let's look at the inset chart on the left here. It's just loading up. Here's the August low at 1160. Now, we did a little step-like movement here. And originally when I saw that, I thought, oh, that looks, that measures like a zigzag. That could mean that we break into lower lows. But then we started to see a 3 price swing event down here. And we actually turned our position around when we broke this level. It wasn't what I expected prior to that, but we were actioned enough to get into, cover our shorts and get into longs.
If you don't learn how to change your mind, you won't have any change left. W.D. Gann.
I do love that one, actually, and so good in its essence. But one thing that really struck me was that the way that we went from this 1196 level up into the February high here, 1347. For an Elliott, for anybody interested in Elliott, this is a typical 5-wave pattern, but you've got a 1-degree subdivision in the 3rd wave, which is quite visible. So you've got basically a 9-wave sequence. So you go 5 to 9 because you've got 5-wave subdivision in wave 3. But the nice thing about this, and you know that my work specializes in fib price ratios, and we've developed various fib price ratios to fit different patterns in different circumstances. And the one that really worked out here is to extend the first 1-2-1 sequence here by 1618. And if I double click, that's where the projection came.
Okay.
So you can see that that was a perfect timing for the structure of the pattern and the measurement, the amplitude, to finish a 3rd wave from there. But you see, we've got a 4-5-4-5 sequence to develop a 1-2-1-2. It's got to drop down here, and then we've got to see 2 successive higher highs. So we've got to, after getting down here, we've got to go 5, 4, 5, like this.
Okay.
And yeah, that's the only way I could see gold progressing from this pattern since. So shorter term, yeah, we could drop down here, but then we're going to have to get something like that going. I don't think that we've got any inflation to worry about at this juncture. And
maybe it's just central bank buying. Maybe it's a currency thing. You know, after the dollar blow off. I do have a question, and I've heard it a lot. If someone wants to learn Elliott wave, what is the best way to start? From Umar. How would you start? How did you start your trade? Your people on your desk to learn Elliott?
Right. Well, I'm actually working at the moment to get a more detailed, concise program, tutorial program together. I guess I'm some months away, but we want to get that ready for a new website that we're developing. We're going to put a lot of information on there. I've got quite a bit already that you can see on wavetrack.com. So, Umar, if you're listening,
Yeah.
If you're listening, go to wavetrack.com, and you can go in here and you can see under Elliott Wave Resources, you can go tutorials. We can click on that now, and there's some quite good articles in here, and this will get you going. And we can also, I mean, if you click on the wave principle itself, there's a huge amount of tutorial in here. Start this way, and you can see there's a lot of pictograms here, and you can test your way along the way to match up some of these chart patterns to what you're seeing real time. So there's definitely a lot of material in wavetrack.com there under testimonials, and piece your way through it. One of the other things is that our bi-weekly report, the Elliott Wave Compass, which is $39 a month, so we've priced it very keenly to attract everybody, is very tutorial minded. You know, we're always commenting on why this pattern, why are we changing things, or why is this still working, and what are the price ratios, and how do we derive them? And it's absolutely packed full of information. Every week, twice a week, we're packing each of these currencies, commodities, and stock indices with all of that information. We're not leading you down a blind alley. We're actually describing in a lot of detail exactly what is developing and why it is, and what the logic behind it is. And actually, a lot of our subscribers often come through to thank us for leading them in that way, because it is not just helping them trade better, but you know, there's a lot of tutorial information in there.
Yeah, like I always say, and I mentor people too, Peter, and it's really not the trade that matters, it's the whys. It's knowing the whys, because you know what? None of us live forever. And I want people to have tools to use for the rest of their life when I'm retired on Grand Cayman Island, just hanging out, man. And so
great.
they have to learn the whys behind the trade so that they could become self-directed and not just dependent upon any analyst.
No, I think that's a great virtue that you have, and if anybody's listening to Dale speak to that, well, you know, I bow in awe, because you know that has got to be a way that, you know, people like yourself and can actually give something back. You know, we've taken a lot from people that we've been learning from in the past years, and we can give something back, and we like to do that. So I think that's a great virtue. And no, I think that ultimately when we start looking at helping others, you always find that, and I've always found that if the more you give, the more you receive. So there's a good rule to that.
Yeah, you reap what you sow, and what an interview. So, you know, definitely, I would say it's a bumper crop of compelling ideas from you today, Peter, to carry the farmer metaphor a little further. So the best way for people to follow you is go to your website. You want to give that address again, or let people take a screenshot of it? Great.
Yeah, let's go to wavetrack.com. So www.wavetrack.com, and just go there. And if you feel inclined to delve into Elliott Wave, if you haven't done so already, or if you're already a beginner or an intermediate trader and you want to learn more about fib price ratios, because you know, within the Elliott fraternity, we are specialists in fib price ratios. We put a lot of emphasis there to give targets. Then just go to our registration area, subscriptions, and you can subscribe to Elliott Wave Compass, and we've got generous discounts for longer term maturity subscriptions as well. So this is where you can find it. So thanks for allowing me to plug it.
Okay, buddy, my trading warrior brother, thank you for edifying faith once again today, Peter.
Thanks so much, Dale. I appreciate it. Good luck to you.
All right, good hunting, Peter. That's Peter Goodburn, my trading warrior brother. And that's a wrap for today. We'll see everyone tomorrow. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Adios. Manny says, thank you, Peter. Omar says, best interview in a month. So we'll wrap it up on that positive note. Thank you, Peter, once again.